Hi everyone, thank you for attending today's webinar. Today we're going to touch on a very interesting topic, the last great deal. Is this a final window before North becomes unreachable? Let's find out. Hi, I'm Shalene.
Hi, I'm Lawrence Wong.
At the end of today's webinar, you'll get to identify the winning formula for high appreciation properties, as well as to know where is the untapped market with high potential and low entry price. You'll learn a deep analysis to find out what is the real price disparity and avoid the 100,000 mistake that most buyers make.
So if you'd like to make a one-to-one consultation with us, just click on the link below and you can connect with us anytime.
Let us share what is happening in the market right now. Trump Park saw a 76% sellout rate at an average price of $2,579. And even the latest launch, Linden Woods, saw a 95% take-up rate at an average price of $2,450 PSF.
Wow, 95%, which is almost out already.
Exactly. So Upper House and Robertson Opus saw robust sales, and even Autoplace, an executive condo in Tengah, sold more than 50% on its first day of launch.
Just to highlight a bit, Autoplace EC, after they opened up for the second timer 1 month later, they actually sold up to about 90%.
This is our property price index for the past 5 years. Despite negative sentiments such as COVID, interest rate hikes, trade war, you can see that the price has been on the uptrend. And this is despite multiple cooling measures. To date, there has been 17 cooling measures, and it is unlikely for our government to lift any of these measures because it will send price escalating. And this is what our government doesn't want to see. The only cooling measure that has been lifted was the introduction of seller's stamp duty to 4 years in 2011, and that was reduced to 3 years in 2017. But it has since reverted back to 4 years just 2 months ago. We also dive into new sale median prices across the different regions, as well as the resale prices.
So let me ask you a question. What is important in terms of the purpose of property investment? Would you like to share more?
To me, the purpose of property investment must fulfill this condition, which is the potential to appreciate. People buy properties as a good hedge against inflation, and property prices are constantly rising. Sometimes your rental might not be able to cover your monthly mortgage, although that is a form of forced savings. And rental very much depending on economic conditions, such as the demand from tenants, or is there a global cut of expatriate. So to me, the property must be able to see an appreciation when you are ready to exit. So how about you, Lawrence?
I personally feel that ease of exit is a very important formula in the property investment journey. Reason is because right now government has implemented seller stamp duty to 4 years, meaning to say the buyers will need to hold 1 more year for their property investment journey.
So this property must be easy to exit when you are ready to, otherwise this is sunken opportunity cost for you.
Shalene, I see there are 4 quadrants over here. Here talking about high growth, low rental speed, high growth, high rental speed. So if let's say now I have a $3.5 million, which quadrant do you think I should invest my money in?
If you have a budget between $2 to $3.5 million, we will recommend you to look for properties with high appreciation potential characteristic that gives you high growth and high rental speed.
So if I want to venture into a landed property, what kind of budget do you think I should have?
Landed properties are more limited in Singapore. There are only about 73,000 of them, and the government is not releasing new land for landed properties, which means they have a slightly higher quantum of an average of $4 million. They have a high growth, although it comes with a lower rental speed, but this is of course the most desirable asset class. With our proven framework, we will be able to hunt for the apex property for you. Before we go any further, I'm Shalene. Over the past 18 years, I have been with various listed developers, handling more than 25 property launches from DBSS to landed properties.
Hi, I'm Lawrence Wong. Both of us are husband and wife, and we help a lot of our clients in terms of their wealth growth as well as achieving their financial freedom and plan for their retirement. So now let us take a look at one of our clients' journey. This is Gabriel and Jean. The first we met in 2024. We understand that they owned a multi-generation HDB. At the point of time, they wanted to cash out some of their funds from their stocks to embark their journey to the property investment. So this is what I've shared with them. Okay, at the age of 25 to 55, this is the golden period, which is also the age of leveraging power that we may have for bank loans. Okay, let me do some illustration over here. So at the age of 25 to 55, this is the golden age period that we have the power of leveraging, because we are still working and we have our active income. During this age group, right, what we will do normally, we'll invest into investment, goes to stocks, and we will go to maybe forex trading, and we'll apportion some of the funds to property. And this is what we call the asset income. So just an illustration, if let's say today, we start from small. If let's say I'm aged 25 years old, my funds is about 250K with cash and CPF. I just make it simple for illustration. 250K. This is my cash and CPF. And we have a partner, and this partner is called the bank. And the bank is able to assist us to loan a 750K to have a funding to buy a 1 million worth property. Okay, so right now, 6 years later, let's take it as 6 years, the property price increases, appreciated over the time. Make it conservative. I put it as 150K. And this is the amount I put in. 250K. Okay, same amount. Definitely, just make it for simple calculation over here, right? I just take it as there's no reduce in terms of the loan that I paid for the past 6 years. I just take it as 750K. But however, just remember that this is P&I. When we pay monthly mortgage, right, we have to pay the principal, and this is actually our forced savings, which actually will input into this part, into our funding as well. And this is the interest that actually we pay, just like we pay dividends back to our partner, which is the bank. Okay, so right now, if let's say I'm going to plus this amount that I have, it will be actually about 450K. That will be the cash that we were able to cash out from this current property, the property that we bought 6 years ago, and we're going to reinvest this into another property, which is probably bigger in terms of the unit size. So Gabriel and Jean bought their HDB in the year of 2019 at the price of $930,000. So within the next few years, right, there isn't much transactions, and the highest transacted price was close to about $1 million. And when we started our marketing strategy, at the very first viewing, we managed to break the record price of selling at $1.39 million. And this is out of their expectation because they were expecting to sell the property at the price of $1.2 million. So what happened next, right? Initially, their funding to buy their very first property for their own stay is about $1.9 million. But because of the increase in terms of the sales proceed, they managed to get a property at $2.1 million in the Northeast region. So next up, they are going to embark on a journey to get an investment property at $1.85 million. So in totality, right, we have about 3.95 portfolio worth for Gabriel and Jean. So now let us take a look at this graph. In year 2025, they took the action by selling their 1.39 million HDB, and they bought 2 properties at a portfolio of asset value of $3.95 million. Let's take, for example, the appreciation is based on 2% per year. At the age of 55 years old, the asset value will have been accumulated to about 4.6 million. 60 years old, asset value will be about 5.1 million. And lastly, at the age of 65 years old, when they decided to pull the trigger to sell away the assets, this is what's going to happen. So right now, at the age of 65 years old and onwards, they have this $5.63 million equity. They can diversify their fundings to HDB or condo at about $2 million for their own stay, and keep 1 property for rental to get their rental income, and passive income will be $1 million put into the dividend or stocks to earn interest, and lastly, 630K cash for their retirement and to maintain their lifestyle. So if let's say they do not want to put this amount of money into rental, maybe they want to save hassle, they can actually divert this $2 million to another pocket, which is the safest, which is the fixed deposit, or even put more into the passive income, which is the dividends and stocks. Okay, so this could not have happened without a proven framework.
So over the years, we have developed a value framework to help you identify where is the untapped market and zoom in to the right property using our lot framework. Value, is this the right entry? Is it undervalued or overpriced? Area and amenities, what is the location they are looking into? Is there any schools or supported by MRT? And how is the connectivity for transportation? Is there a growing demand? Because a growing demand will lead to a higher volume of transactions. Other than looking into the balance lease, we dive into a lease reset calculation to find out the real price disparity. We zoom into the urban renewals. Is there any government-led initiative for new infrastructure, hubs, or MRT lines? We look at your exit strategy, when, how, and your exit milestones. So using our value framework, this is how we help Gabriel and Jean identify the right unit for them. First, we were quick to identify a unit with a lower entry PSF. So you can see we were quick in identifying a lower entry price unit for them. We bought this unit at 1154 per square foot, and you can see that the recent transaction after they have bought climbed up to 1373, 1386, and even 1493 PSF. Areas and amenities. We identified that area with great connectivity to transportation, schools, and even growing demands due to the enhanced neighborhood. So in a short span of 5 months, we can see that there were another 17 other transactions done. So with more volume of transaction, it will help to push up the price as well. Other than looking at just the balance lease, we dive deep into a risk reset calculation. Let us take a look at our risk reset disparity. So Gap and Jean was comparing between two resale properties. Development A has a price of 1.82 million. On the surface, it has a PSF of 1012. And development B has a price of 2.1 million. On the surface, it has a price of 1154 PSF. So development B actually looks like it is more expensive. After we did a lease reset disparity, we found out that the actual PSF of development A is 1411 PSF, whereas development B is 1329 PSF. So it is now clear which is the winning property that they should pick. So we also help them dive into the urban renewal and notice that there is an upcoming transportation hub which will bring about more job opportunities and more volumes of transaction as well as activities. We also plan out a when, how, and exit milestone for them in the event that they want to exit and cash out.
Hey Charlene, do you still remember 10 years ago, we have this very commonly used strategy, sell one, buy two.
Yes, it was very common for people to buy more than one private properties at that time. But because of rising prices and TDSR, buying has become more difficult. So now we are seeing a trend of people combining names to buy a bigger property instead.
Bigger property will be 4 and 5 bedroom, right, you're saying?
But why?
So now let me do a very quick illustration for you why buying a 4 to 5 bedder comparing buying a 1 bedder, the difference in terms of the profit gain. So now let us do a very simple illustration. A 1 bedder versus a 4 bedder. Let's take a look what kind of profit they will get. For example, if let's say now a 1 bedder with 473 square feet in size and 1,300 square feet for 4 bedder. Take for example, a 200 increase in terms of the PSF. The profit margin over here, right, for the 1 bedder will be about 94,600. And for a 4 bedder, it will be about 260,000. So Charlene, which one would you prefer?
I definitely go for the 4 bedder. Because by the time I see a $94,600 profit, after minusing off my buyer's stamp duty, legal fee, agent fee, and interest, to me it's almost no profit.
Okay, Charlene, so which region is being neglected over the years?
Based on the master plans that we have so far, we have already established Changi being Terminal 5 is up and coming. The Paya Lebar Air Base is going to relocate and make ways for 150,000 homes. Tampines Region Centre is also going to have more offices and homes. So Jurong Lake District is going to be the second CBD, and we have the Punggol Digital District, which we're going to be completed by 2026. Let us also share the correlation of property prices and urban renewal. In 2008, the government has announced Jurong Lake District being the second CBD of Singapore, and immediately, J Gateway was launched at an average price of 1450 to 1650. This is much higher than the suburban launches of $1,000 PSF at that time. The resale prices also rose from 786 PSF to 904 PSF. Jadon, which was launched in 2023, also saw robust sales of 88% and an average price of 2451. In fact, by today, the highest PSF transacted in Jadon is already 2,800 PSF. So we can see that after the government's announcement of Jurong Lake District in 2008 till now, prices in D22 has appreciated by 139%. So what's happening to the North right now, Lawrence?
The rise of the North. In the recent sales Springleaf Residence launched in August, we have sold about 92% at an average price of 2,175 PSF. And let's take a look at Norwood Grand. It was sold at 84% at the price of 2,067 PSF. So next, Canberra Crescent Residences achieved a 40% sales at a price of 1,974 PSF. If you notice, over here, this is the supply of 4 and 5 bedder in the North region, Northeast region, as well as the East and West. Let's take a look. In the North region, right now, the 4 and 5 bedder supply we have is about 1,322. Northeast, we have 2,223 units over there. And East region, we have 1,987. West, we have 1,841. So just have a quick look. Meaning to say, over in the North region, we have lesser 4 and 5 bedder supply.
Does that mean that there is a lot of demand in the North?
Definitely.
How about what is upcoming in the North?
Let's watch what our Prime Minister has to say about the North region for the next 10 to 15 years.
Some people say that the northern part of Singapore is more ulu, more remote. I assure you it's not, so tonight I will focus on the north. We will redevelop the Woodlands checkpoint. We've acquired land around the old Woodlands town centre and the surrounding areas, and we will reclaim additional land. So we will have an expanded Woodlands checkpoint. It will be 5 times bigger. There will be spaces for new homes too. Nearby, next to Admiralty Park, around 4,000 HDB units in a new Housing by the Woods precinct. And we have also set aside space for more housing, including public housing, along the Woodlands waterfront. We will build a new public housing estate here in Kranji. There's space for 14,000 new homes, more than Bidadari New Town. The homes will be nestled amidst lush green spaces and supported by more amenities, including a new neighborhood center around the Kranji MRT. And this will be a new housing development combining urban living with our rich natural heritage. And it's something we can all look forward to in about 10 years' time. Sembawang Shipyard played a key role in our early industrialization and powered the growth of our maritime industry. As we redevelop the area, we will preserve the rich maritime character of the site. One striking feature is the dry dock. It was then the world's biggest dry dock. And there are many possibilities for creative reuse of the space. We could make this a community space for sports, for concerts, performances, and events, or a plaza for people to get together with their family, friends, and loved ones. Beyond the dry dock itself, there are many other things we can do with the rest of the site. And it's also a large area, about 3 times the size of Ang Mo Kio town centre. We can capitalize on the coastline to develop something special. There will be homes with waterfront living. We can have new concepts for dining and shopping, as well as community spaces along the promenade.
Prime Minister has mentioned that he doesn't want to make the North region to become a ulu place for the next 10 to 15 years and see what is going to happen over here.
The redevelopment of former racecourse means that there will be more new homes, new hub for sports, and even community for horse riding.
Okay, so next will be the Woodlands waterfront redevelopment. At this area, the beige color land piece will be the residential area. We will have public housing as well as private residential housing. And over here, we also have integrated development. It will be a lifestyle living along the Woodlands waterfront, which is near to the Johor Bahru coastline. Okay, so for Woodland Regional Centre, the economic hub of the Northern Gateway will have enhanced connection between Johor Bahru and Singapore, which benefiting Woodlands as well as widen the North region. It will also benefit from the Johor Singapore Special Economic Zone.
The Sembawang shipyard will also house high-rise waterfront living with water sports boat house. So just imagine yourself living in Sentosa but right in the north. So with injection of new homes will come more amenities. Like what our Prime Minister has shared earlier, Kranji, Sembawang, they are rejuvenated to increase more new homes. So take Springleaf for example, other than Springleaf residence, the site next to it is up for tender with residential and commercial on the first story. And over the 10 years, we have seen the township of Springleaf, Chencharu and Yishun being crafted out carefully. So this means that the government is taking this initiative seriously. Khatib Camp will also make way for another 6,000 new homes. Chencharu will have another 10,000 new homes. In fact, the land bid for Chencharu have just closed. It will be a mixed development connected to Khatib MRT with a bus interchange, hawker centre and tons of amenities. Sembawang will also see new EC as well as Woodlands. How about the connectivity, Lawrence?
So let us take a look at the enhanced connectivity ever since the Thomson East Coast Line is launched. We are connected from the Woodlands area all the way down to Marina Bay and right all the way to the east that connects us to the Changi Airport. And we also can see that just a few stops from Woodlands, we are connected to the queen of all lines, which is the Circle Line that can link you to most of the MRT lines.
The opening of the Thomson East Coast Line has also seen prices increase by an average of 32.6%.
Now let us take a look at the North-South Corridor. It's still in progress of constructions. From 2007, it will be concentrating on building the North Corridor, subsequently to complete the South Corridor in 2029. Once the North-South Corridor is being constructed, it only takes 30 minutes from you to travel from the Woodlands all the way to the Central City. Okay, so this is the North-South Corridor transformation between all the districts along the North-South corridors. Let us take a close look in terms of the performance. District 27 and 26, right, they are actually the North region. So over the past 5 years, they have outperformed the rest of the district along the North-South corridor at a very good growth of about 50%. How about connectivity beyond Singapore?
This is my favorite because the RTS will open by next year, connecting us from Woodlands North all the way to JB in a few minutes. Let us dive deep into the price disparity between the North and the rest of the other regions. So on average, the resale prices of the 4 and 5 bedroom in the North is calling between 1,300 plus to 1,400 plus. We dive deep into the resale of the 4-bedder in the North. So the resale 4-bedder is asking between 1,003 PSF to 1,004 PSF. How does this put us against the new launch? Springleaf Residence being one of the latest new launch in the North, the 4-bedder has a price gap of $114 PSF compared to Sora in the West. It has a whopping price gap of 525 PSF compared to Tron Park and 410 PSF as compared to Tembusu Grand. How about comparing the resale between the North and rest of the region? Canberra Residence, 4-bedder, they are asking 1308 PSF, a gap of 159 PSF, and compared to the Minton, 441 PSF, and a price gap of 435 PSF as compared to Tapestry, which is in the east. Finally, if we were to zoom just into the North region, let us compare the resale versus the new launch. Canberra Residence has an asking price of 1308 PSF versus Canberra Crescent's Residences that is asking for 1945 PSF. This has an even bigger price gap of 637 PSF. So are there still opportunity in the North? Let us take a look. With the launch of Canberra Crescent's Residences at 1,900, if the resale development or the surrounding development has got good attributes, high volume of transaction, and if they are asking for 1,003 PSF, we will see the first catalyst PSF push when Canberra Crescent Residences launch. Now, not to forget, there will be new launches coming out next year and even in 2007. So when Canberra Crescent Residences obtain its TOP in 2030, they are likely to ask for another $300 PSF, and that's where the surrounding developments will see a second catalyst PSF push. Guide to the winning 4 and 5 bedroom with high growth potential using our lot framework. First, we will dive deep into the layout analysis and ensure that it has a regular layout, a usable size, and an ease of flow. It has high efficiency and this will appeal to your resale buyers in future. We also dive deep into the stack to check out the orientation. Is it a premium stack? What is it facing? And what are the potential blockage to your views? Also, we'll dive into the resale transaction, new launch transaction. We will analyze the per floor difference to determine if you should pay a premium for the floor difference. Using our lot framework, we have helped our investor, Keith, 37, to unlock an additional 166,000 profit by choosing the right unit for him.
All frameworks are adjusted according to the market cycles.
Once again, I'm Charlene.
I'm Lawrence Wong.
Click on the link below for a one-to-one consultation for your personalized real estate roadmap.
We have come to the end of our webinar. Thank you.
And see you soon. Bye.